Okay, we're recording? Yep, we're recording. Okay, this is a special video. And you may notice I have a hospital background behind me, and that is because we are doing the autopsy of our trade that died earlier today. Yeah, it died a absolutely horrible death. Yeah, I mean, gosh, you hate to see it. It had so much life until it didn't. Yeah, so we were looking at our initial setup here, and then we held out a bit longer for what I thought would be an even better setup somewhere up here. But of course, yeah, neither played out because bam, we were skull and crossboned. We were stopped out at this point here, which was 1826.13 or somewhere thereabouts. For I think a $9 loss, which is quite sad because our I think percentage-wise that would be like a 5 or 6% loss to our trading account. But that's why we're trading with small numbers, is because we are very much still learning. So back to my base. Without further ado, I will go over some things that I identified as being potential warning signs that I didn't recognize. Well, really just one. So, okay. All right, so let's look at how things played out. This is what I initially saw. Of course, we're watching at 200 times speed, so I happen to have the screen being captured because why not? I thought it'd be cool, and it is cool. So we can see the line I drew out in orange, with the orange brush, of how I thought price would proceed, and we can see, you know, it seems to be doing what we thought. We have the fib drawn out from the top to the bottom. That's those golden areas. As well as that imbalance. At this point, I'm like, hey, things are moving a little bit ahead of schedule. Look at that. Things are going great. Yeah. Oh, all right. Whoa, oh, okay. Oh, wow, all right. Yeah, so that's, you know, I put in the second position. Because, you know, I thought, okay, I'm still confident. Things are gonna go my way. Then I kind of, you know, well, I left to run some errands, because at that point, oh, yeah, I was stopped out while All right, I just got back from running some errands, and it looks like from earlier today, our trade did not go so well. Yeah, no, it didn't. So I'll come back after I do a workout, and we'll do an autopsy on the trade to see exactly where we went wrong and how we can improve for the next trade setup. So, and actually, I'll leave the recording going just so we can get some more price action. Okay. Well, I did leave the recording going, and I did have an excellent workout, so that is some consolation. All right, we are taking a look at why the trade we placed earlier today failed so miserably. And the best reason that I can come up with, and of course, we'll never really know for sure, because, well, our knowledge base is very shallow at this point, so not too much to draw from. But what I can see is that we were in fact in the deviation of a range that had formed about 2 days, 6 hours ago. So for the 12-minute time frame, that is a sizable range. And we can see price forming the top of the range by being rejected off this point, or this level, which lines up with a 4-hour support and resistance level. And then we're able to identify the EQ line of the range just based on how price interacts with this level here. And we don't have the bottom of the range really worked out until a bit later. We start to see some rejections down here, which is more of a hindsight thing. You may be more tempted to place the bottom of the range somewhere around here, this level. But for our purposes, it doesn't really matter. What matters is that we did not recognize the intrinsic upside bias that was present throughout the entire trading day because we were in a deviation below a range. So price was naturally inclined to, one, regain the range, and when it did regain the range, to make this mad dash to the top of the range, which of course, I put the little skull and crossbones in here, shorted out, or stopped out our trade. So that is the best thing I can think of. I saw some things that seemed promising with this trade. The one was this large imbalance on the 12-minute, as well as the clear drop, base, drop structure. And then I even drew out how I thought the trade would progress, and we seem to be following that quite well. Pretty much up until the point where the range that we just talked about was entered into. And at that point, price really just went wild up to the top of the range. Yeah, so that's the best I could come up with on the spot. I don't want to spend too much time dwelling on it, but yeah, no, it's something to look for. I'll look at the momentum waves really quickly, just to see if there's anything there that might have given me Notice the support and resistance flip that we have here at the onset of the range is that once we cross over this level, 1810, that kind of becomes the floor. Whereas previously, for about two days, that had been the ceiling, and then this would have been the bottom of our range. So in our little deviation, we break down into this prior area. So the question is it going to stay down there, or what? And the answer is no. It's not. It wants to get back up to this higher range. So I will be really interested to see what price does once it tests that level again. But I have a feeling we're going to stay in this area for a while. Although we do still see money flow is in the red, and this could be an anchor wave and a trigger wave. RSI is saying we are currently overbought. Yeah, I'm seeing indications that that price should be moving to the downside. Money flow also red on the 4-hour, as it has been for you know, 11 days. And one more thing I want to point out is that if you were able to recognize this as a range, and then these 2 points, or these 2 areas as deviations, that is actually a strategy that was part of the series that we looked at earlier, called a double deviation. So basically it has 4 steps. Price deviates to one side, price deviates to the other side, price returns to premium, which in this case would be the top side, which it always is, okay. And then we can find an entry there. So we actually have this structure playing out right before our very eyes, or did yesterday, or the day before. So we have deviation 1, deviation 2, and then we have this this movement up to the top of the deviation, up to the top of the range again. This all happened prior to the disaster of today's trade. So something there.